What's up, homies? Welcome to another episode of the Homies Real Estate Podcast. This is your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together we're breaking down this crazy real estate market. Angel, it's the beginning of September. What time is it?
Market updates.
Time to go over the market update for Orange County, the OC. So, as usual, I'm going to go over all the data quickly. Just rocket rounds. And then me and Angel are going to dissect it and then give our projections for the future. I will say, if you're listening to this on Spotify or on Apple Podcasts, I would 100% recommend watching this one on YouTube because we're putting the charts there and it'll make it easier to dissect. But with that said, Angel, let's go ahead and hop right in. So Orange County median sales price, it did increase from last month. July 2022, we're looking at $972,500, and now it's at $985,000. So about a $13,000 increase. That's up 9.4% year over year. Last August, we were looking at $900,000. Now, when we look at median price per square foot, that did decrease from $602 in July 2022 to now $589. Now, this is probably a better indication of whether prices are decreasing or increasing. At our peak, we were looking at $631 in May 2022. So you can see that it looks like prices are continuing to decrease, although we did see median sales price increase. When we look at how fast homes are selling in Los Angeles County, they are taking longer to sell. In July 2022, that was 12 median days on market. And now in August 2022, that's 16 median days on market. So that's an increase of 4 days, which is a lot. At our peak, we're looking at 6 days on market just in March 2022. So you can see that it's increased 10 days. Now, when we look at inventory month supply, if there was no more homes listed in Orange County, currently it would take 2.2 months for the current homes on the market to be sold. In a balanced market, we're talking about 5 to 6 months. And in a buyer's market, we're talking about 6+ months. So you can see we're still in a seller's market, but it's increased quite a bit. At our peak, we're looking at 0.7 months in December 2021. So in less than a year, it's more than doubled. When we look at how many active listings are on the market, it has decreased since last month by about 100 active listings, but it's still up 22% from a year ago. So last August, we were looking at about, at about 4,100 active listings. And right now we're looking at about 4,800 active listings. We're typically looking in the ballpark of 6,000 to 8,000 active listings in Orange County the last 5 years. So you can see we still have a lot less active listings historically. And then when we look at how many closed sales there was, it has increased since last month from about 1,900 to about 2,100. But it's still less than a year ago. A year ago, we were selling about 3,100 homes, and now it's at 2,100 homes. And in August, we're typically seeing somewhere in 2,800 to 3,500 ballpark. Because you can see we're selling a lot less homes than we historically do in the OC. Angel, what caught your attention the most?
Yeah, I mean, it's interesting. I think this is how the sales price increased, but then the days on market is up. And also the price per square foot is up as well. Month supply, everything's up.
Price per square foot is down.
Down. Yes, correct. Is down, which usually they go hand in hand, right? Price per square foot goes up, so does sales price. So it was the opposite this month. So very interesting. I think it's kind of a little, if you want to say, blurry, right? Like, is the price truly going up? Or what was the real case here in Orange County since the price per square foot went down, right? And then everything else just points to more of a buyer's heading more towards a balanced market, right? So I think it's a good signs for you buyers here in Orange County. I think that's kind of my main takeaway.
Yeah, I mean, you're right, Angel. Median sales price did increase, but the other three main categories, right? Days on market increase as well, which is on the buyer side. Inventory month supply did increase, which is on the buyer side.
Yeah.
Median price per square foot did increase. That's on the buyer side. So if you weigh 3 versus 1, it looks like it's trending more towards the buyer side than it is the seller side. Exactly. So this is really good news, like Angel mentioned, for buyers. I will say that we anticipate the market continuing to soften. We anticipate the market continuing to see more days on market.
Exactly.
We continue to see less buyer demand. We'll likely continue to see median price per square foot, and more than likely median sales price also continue to decrease. But Angel, what are you seeing right now? Like, are you seeing there are more offers where sellers are helping buyers now because interest rates are increasing?
Yeah, I mean, one, I would like to preference, I do work more with clients in LA County. So, don't have too much Orange County clients. But what I can say for LA County is definitely pushing on that closing cost assistance right now from the seller side. And I wouldn't be surprised if it's the same in Orange County, right? And what really that does for you buyers is it allows you guys to use that closing cost assistance to buy down the interest rate, right? Interest rates are very, very volatile right now. Today, we're at an average 30-year fixed of over 6%.
6%.
So, yeah, just 3-4 weeks ago, that was, I want to say, around 5%, right? So that's how quick the market's changing right now, how volatile the market is. And that affects your purchasing power, right? So how do you balance that out, or how can you maybe get back to that monthly payment that you wanted? Is this the seller helps with closing costs, so you can use that closing cost to bring down your interest rate. And of course, if you bring down an interest rate, you have a lower interest rate, you have a cheaper monthly payment, right? So that's a strategy that a lot of buyers are using right now, and even sellers, right? They're pushing it. They understand that the rates are high, and the listing agents are advising their sellers, let's give them closing cost credit, so that monthly payment's more affordable, and we're going to attract more buyers that way. So that's very, very common, a very, very common strategy at the moment.
Yeah, I would 100% attest to that. And like Angel mentioned, interest rates are increasing right now, and sellers realize that as interest rates increase, buyers are qualifying for less. So it makes it more difficult for them to sell their home for more. So it's very imperative that sellers do whatever they can to get their home sold as soon as possible, because the longer they wait and the more that interest rates climb up, it's going to be more difficult to get the price that they're looking for. So if you're able as a seller to help buyers out with closing costs or buyer interest rate buy down, it's going to help you sell your home sooner, right? And Angel, I know you referenced this in the Los Angeles County market update, but quickly explain what the 2-1 buy down is.
Yeah, so a really popular thing that a lot of banks are rolling out right now, it's kind of like a program, if you want to say. It's called a 2-1 buy down. Essentially what it is first, this has to be paid for by the seller via seller credits, right? And essentially, let's say that your rate right now is, let's just go off of the average 30-year fix. Let's say 6%, right? 6% interest rate today. But so what the 2-1 buy down will do is the seller will pay for the buy down, right? And in the first 12 months of your payment, your interest rate will be 2% less. So your first 12 months of payments will have a 4% interest rate. After you complete those 12 months of payments, your next 13 to 24 months of payments will go 1% higher, which will be at 5% payment, at a 5% interest rate, right? And then after that, it will go back, after 24 months of payments, it will go back to the regular 30-year fixed 30-year fixed rate of 6%. It will not change after that. You'll have a 6% fixed rate for the life of your loan, right? And what it really does more than anything is it's buying buyers time to refinance somewhere in between those 2 years, right? Between those 24 months of payments when rates get lower, right? So for you FHA buyers, you can do an FHA streamline, which is a quick refinance method that the FHA allows. For you conventional buyers, you can just refinance to a lower payment, potentially remove mortgage insurance, different options to do right within that 24-month span.
Yeah, so that's a great option right there. Like Angel mentioned, to buy yourself some time. Another strategy that you can utilize is just requesting closing cost. Let's just say $10,000, putting that into a bank account, right? A savings account, and then pulling $500 or $1,000 a month to subsidize your current mortgage payment. So if you want to go that strategy, you can, because like Angel mentioned, the 2-1 buy down has to be paid for by the sellers.
Correct.
But sellers, again, I urge you to try to help buyers out, because you need to work together to try to get the home sold as soon as possible. You want to get it sold as soon as possible, because As interest rates increase, it's harder to sell your home for more. And then for them, because as interest rates increase, they have to pay more. So you have to work together to try to get this home sold, because interest rates are volatile. We've now entered the 6% average 30-year range, and there's no saying where it's to go now. It might go into 7% in the next 3 to 6 months, right?
Yeah. So, and one thing too, you sellers are in a favorable position in regards to the comparables in the market right now, right? So there's comps right now. Like your home's probably not going to sell for the highest comp in your area right now. Just probably not going to happen. Potentially will, but probably not. So if it's not, guess what? You can tell the seller, just pay $10,000 more, and that $10,000 I can give you in closing cost credit, because that's going to go a lot further for the buyers than hit them getting a $10,000 discount on the home. So that's one thing to mention, and that goes back to having the correct listing agent on your team to be able to guide you and have different strategies to get your home sold for top dollar, and more than anything, put money in your pocket, right?
Yes, absolutely, Angel. That's 100% the case right there. I think there are unfortunately some sellers and some listing agents that think the market hasn't changed it. They think that they can still sell their home for top dollar without, one, properly marketing it, and number two, negotiating in a win-win fashion. For the last 2 years, you didn't have to negotiate for a win-win fashion. You were going to get 20 offers if it was properly marketed nonetheless, and you were going to be able to sell it for at least what it appraises for, but likely even more. So it was crazy. Like buyers, sellers, you never saw a market like that in your life. And then now it's changed. Like now you have to work with the buyer's agent and the buyers to make sure that everybody wins. So
it's honestly sometimes, and no disrespect to, of course, anyone in the industry, we're always trying to better ourselves and educate ourselves. But sometimes you speak to these agents and they have no clue what's going on in the market, right? And it's just like, this is your career, this is your living. So, and I only say that to say for you sellers is just to make sure to put yourself in with the right people, right? And to put yourself in the best position to win, especially on the seller side. I mean, you guys already made that investment of buying a home. Now you're trying to cash out. Just try to get the most money for your property.
Absolutely, Angel. So I think this gives buyers and sellers a pretty good idea of what the market's looking like. A couple strategies for both buyers and sellers to win in this environment. Let's give a little projection, Angel. So median sales price did increase, but it still looks like we're heading towards
buyer's
a buyer's market or a balanced market.
Balanced market's the best word.
Yeah. Remember, a balanced market, for those of you that don't know, is about 5 to 6 months inventory month supply. We're currently sitting at about 2.2 months in Orange County. So we're a ways away from a balanced market, but we're quickly heading in that direction because of the lack of buyer demand and because of how long homes are starting to sit on the market. But Angel, where do you anticipate median sales price heading next month? Do you anticipate it decreasing?
Yeah, I do predict this decreasing. Again, all these other factors, the factors that we outlined in this for these statistics point to a more of a balanced market, along with the increase in interest rate, less loan applications. The Fed's going to increase the Fed fund rate this month. So all those are just signs that I think that will affect the purchase price or the average sales price or the median sales price, excuse me. And I'll see a 10%, at least a $10,000 decrease is what I'm thinking. So that's my projection.
Yeah, that's a good projection, Angel. I'm right there with you. We're saying this across the board. It doesn't matter whether you're in San Diego, San Francisco. It looks like prices are starting to decrease just because of how much interest rates have increased and how much that's impacted buyer demand. So yeah, I can see median sales price taking about a $15,000 decrease. I will say that it already has decreased quite a bit. Remember, our peak was $1,060,000 in April 2022. Right now we're sitting at $985,000. So that's about an $85,000 decrease already. From our peak earlier this year. But yes, I can see median sales price dropping from $985,000 to closer to $970,000, maybe even less. But nonetheless, I will tell you, buyers, that if you're able to purchase and work out some sort of closing costs or afford the mortgage payment, real estate does tend to appreciate over time. This might be one of those years where maybe year over year it does depreciate, but once interest rates finally start to drop back down And I'm not saying that they'll likely go under 3% again. That may never happen ever again, but it's very likely that they drop under 5%, maybe even under 4%, because we've been under 5% for over a decade now, like a decade and a half of under 5% interest rates. So once that happens again, and that becomes a norm, like 4% interest rates, you're going to start to see the biggest pool of buyers, which is first-time home buyers, re-enter the market again. Yep. And they're going to be re-entering the market with lower interest rates, qualifying for more, and then likely purchasing the home across the street from you for about $100,000 more, if not even more. And what that means is that's equity for you.
Exactly.
So if you're able to purchase and just know that it might be tight for the next year or 2 years because of interest rates, but once interest rates finally drop back down, number two, you get two things. You get one, you get a huge increase in equity because the home across the street sold for $100,000 more. And number two, interest rates dropped. So now you can refinance and have a much more affordable payment. And if you came in with less than 5% down, you can now remove the mortgage insurance when you refinance as well, because you will likely have, the 20% equity at that point.
Exactly.
Yeah. So, Angel, I think that wraps it up. Where can we find you at?
Your Mortgage Angel on Instagram.
At Your Mortgage Angel on Instagram. You know where to find us, at the Luevanos Group. If you haven't already, please subscribe up to our YouTube channel. And with that said, homies, I want to wish you all the best. Peace out.
Thank you. Hey, homies, it's Angel from the Homies Real Estate Podcast. This podcast contains our opinions and is for educational purposes only. It does not guarantee any projections and should not serve as the basis for any purchase or sale in real estate.